In this video, we will discuss the current state of the stock market and have an updated analysis on Clover Health with my price target and current risks that have started in China's Lehman Brothers type collapse. As always, do not like, subscribe, or hit any notification bell. Just sit back, enjoy, and let's get straight to business. We woke up this week to a massive bloodbath surrounding many sectors, and all of us were wondering whether this is the start of another stock market crash. Well, the story starts in China, where you have the biggest real estate business starting to crumble like a 2008-style Lehman Brothers type collapse due to its overexpanded real estate turned electric vehicle turned water company that used Jackie Chan in one of its commercials started to show signs of failure in early September. The giant's ability to generate revenue year over year was not enough to pay their increasing debt. Therefore, the whole business, including their new energy vehicle company, are on the brink of collapse. Investors are paying close attention whether Evergrande can pay the interest payments of two notes that are due this Thursday. Global financial markets are all interconnected and webbed together, which is the main lesson learned in the 2008 recession. Companies that were heavily invested in Evergrande's operations might have to sell securities from other business investments to offset their losses. The global economy is fearful of what might happen if such a big company like this collapses, and they question whether the Chinese government will bail them out. Think of it this way. If this cripples the Chinese economy, do you think the people of China will purchase more Tesla Model 3s? Or how about iPhones? There are huge Tesla and Apple factories in China. Thus, for America to succeed, China must succeed as well. Back at home, we had a glimmer of hope. On Wednesday, Federal Chairman Jerome Powell stated that they will continue buying $120 billion of asset purchases and sustain interest rates at near zero. They believe the taper will start middle of next year in 2022, and they said that the start of tapering will be independent of the interest rate hike. It wasn't a surprise for most investors that the Feds might delay tapering because last month's jobs report was terrible, as you can see in the graph I made above. This does not meet substantial further progress. The inflation data was a nail in the coffin because inflation has been transitory, which falls in line with the narrative of the Federal Reserve. As you can see, the rapid rise in inflation in the CPI data since February 2021, we have been ever so decreasing since June. With the weak jobs report in August, along with the increasing cases of the Delta variant, this led the Feds to delay tapering and steady interest rates at near zero. So what does this mean? Inflation will start rising, the value of the dollar bill will go down, investors will start to park their money in the stock market waiting for the taper to be announced. We might see another record high on the NASDAQ, and stocks that I am bullish on, such as Clover Health and Palantir, will continue to rise. Now that we talked about what is happening in the global market, let's shift our focus on the current state of Clover Health. It's been 8 months since Hindenburg, a short-selling firm, published their hit piece on Clover Health surrounding the DOJ request for information. I went ahead and read the whole document, and my conclusion is that there are many holes in the Hindenburg accusation of the short-selling report. It has been 8 months, going close to 9 months, and no further news from the DOJ or penalty from the Centers for Medicare and Medicaid Services, CMS, which is one of the major entities where Clover Health derives its revenue. In fact, they just approved Clover Health to expand in Alabama in 2022. Furthermore, Hindenburg plays this DOJ request of information as a direct investigation on Clover Health, when it's only a voluntary-based request of information with no civil investigative demands or subpoenas from the Department of Justice. Here is a response from the CEO and president of Clover Health that outlines and answers each accusation that the short-selling firm wrote in their article published 8 months ago. I will include the website where you can find this in the description below. This company has been attacked for some outlandish, disgusting, false, overextended accusations that do not represent the company as a whole. Since this document has been released, the stock has been attacked by many downgrades, which were motivated by recent put options placed on the stock, which you can see in my videos in the Clover Health playlist on my channel. Regardless of these downgrades, the stock has been a great candidate for quite some time for a short squeeze. Just yesterday, I took this screenshot and you see an increase in the days to cover ratio, the green line. The last time we have seen such an increase was back in June before the short squeeze happened. Just look at the short interest change of plus 6.75%. Even today, on top of yesterday's plus 6.75%, we increased another plus 3.46%, increasing the days to cover ratio, the green line, to new highs. Today's news is a testament to the value of Clover Health, as CMS just approved their expansion in Alabama for 2022. This smart tech insurance company is lifting off and soon will be in every state of the nation. Now let's take a step back and focus on the company's fundamentals so I can set my price target. Overall, in Clover's recent Q2 earnings report, they stated that they are on track to generate a total revenue of approximately $1.5 billion. If we take the current multiple of 4.4, the stock should be at least $15.44. However, before the Q2 earning results, the stock was trading 9.7 times the revenue multiple. Nothing has changed in the company besides the downgrades from the Wall Street firms that have a disclosed put option, which I exposed in my past video on this channel. In any case, if you take Clover's past revenue multiple of 9.7 with their expected yearly revenue of $1.5 billion, their stock should be trading at $34. Thus, Clover Health's price target could fluctuate between $15 and $34. The increase in short interest and negative sentiment surrounding the stock do not fall in line with the fundamentals. So in layman terms, there is more upside to this stock than downside. With the current monetary policy remaining stable from the Federal Reserve and the 140% year-over-year growth of Clover Health, the stock price should catch up to its fundamentals. Peace.